Hello there. Got volatility? We bet you do, as the Federal Reserve signaled on Wednesday that interest rate increases in 2022 are its main priority. There is nothing new there, as investors had expected as many as 4 rate hikes this year, but the message is being fine-tuned. Fed boss Jerome Powell wanted to emphasize that policy is tightening, but it isn't on a preset course, to borrow phrasing from current Treasury Secretary Janet Yellen, a former Fed chief, which could be interpreted a number of ways. Inflation could get worse and the Fed might need to adjust policy, or price pressures might recede in due time. Is the Fed behind the curve? Is it too hawkish? Those are all questions that might take time to play out, but the key thing for investors to suss out is how and where they should be positioned. And we've got some reads on that to share. Send tips or feedback, and find me on Twitter at @ndecamber or LinkedIn, as some of you are wont to do, to tell me what we need to be covering. Sign up now. Get ETF wrap read. What is an ETF? Well, explain. The good top 5 gainers of the past week: percent Performank E Vanek Oil Services ETF OIH 3.6 Crane Shares Global Carbon Strategy ETF KRBN 2.7 iShares MSCI Hong Kong ETF EWH 1.8 iShares MSCI Brazil ETF EWZ 1.7 Energy Elect Sector SPDR Fund XLE 1.6 Source FactSet through Wednesday, January 26, excluding ETNs and leveraged product. Includes NYSE, NASDAQ and CBOE traded ETFs of $500 million or GREK and the bad top 5 decliners of the past week: percent Performance Amplify Transformational Data Sharing ETF Block -9.7 Advisor Shares Pure US Cannabis ETF MSOS -9.4 North Shore Global Uranium Mining ETF URNM -8.7 ARK Next Generation Internet ETF ARKW -8.5 First Trust Nasdaq Clean Edge Green Index Fund QCLN -8.4 Source FactSet Visual of the week: Wednesday's post-Federal Reserve decision action was notably bad for these ETFs, according to Instinet's Frank Capillari. While some of the ETFs and indices we track logged noticeably bad one-day declines, the intraday sell-offs tell the full story. 22 dropped more than 4% from their highs on Wednesday, he wrote. Instinet go abroad? Some strategists have been pointing to the benefits of venturing outside of the US for returns during this fallow period in domestic assets, and the performance of international ETFs point to areas that are, indeed, outperforming handily so far in 2022. That includes the country-specific iShares MSCI Chile ETF ECH, which is up 10.5% in the year to date, ahead of the Global X MSCI Colombia ETF GXG, up 10.3%, while the iShares MSCI Brazil ETF EWZ is up nearly 10%. Latin America broadly, via the iShares Latin America 40 ETF ILF, is up 7.1%, and the Greek fund, the Global X MSCI Greece ETF GREK, has gained 4.3% so far in January. FactSet Meanwhile, the SPDR SP 500 ETF Trust SPY is near the back of the pack, down 8.75% year to date. Where to buy? We caught up with Zoe Berry, who founded nascent trading platform Zingaro, and she had some interested insights about younger investors. Zingaro is a growing trading platform that caters to investors in their 20s and 30s, but also has a range of users, and allows traders to benchmark their performance, not against the SP 500 SPX or the Russell 2000 RUT, but against one another. Berry says that younger investors aren't panicking amid this market downtrend, and note that investors had been loading up on ETFs that are short big technology stocks, which they rightly believed would suffer as bond yields rose, putting pressure on interest rate-sensitive areas of the market. She said 2 of the more popular trades were ProShares Ultra Pro Short QQQ, which is up 46.4% so far this year, compared with the Invesco QQQ Trust, which is down 12.8% so far in 2022. They realize that the market is shifting, Berry said of younger investors. She said, however, that it isn't clear that these investors are operating with tactical efficiency in the way that so-called pros might. According to Peng Cheng, a market strategist at JP Morgan, retail investors aggressively dumped stocks at the beginning of Monday. And by noon, there was a retail order imbalance of $1.36 billion, dumping companies such as chip makers NVIDIA Corp., NVDA and Advanced Micro Devices AMD, as well as tech conglomerates like Microsoft Corp., MSFT. Meanwhile, hedge funds and mutual funds were net buyers of $5.8 billion. The report showed that retail investors did re-enter the market in big numbers that same day as things improved. Berry said that the differences in the younger investor is that they tend to operate more as a collective and crowdsource ideas via social media communities, including on Zingaro and sites like Reddit and Discord. They're actively talking about what to do and no longer shooting from the hip, Berry said. Todd Rosenbluth, head of mutual fund and ETF research at CFRA, told ETF Wrap that investors are also loading up on value-oriented sectors, which we touched on last week. The CFRA analyst said investors are buying ETFs such as the Financial Select Sector SPDR Fund XLF, which is down 0.3% year-to-date, but up 34% over the past 12 months, the Energy Select Sector SPDR Fund XLE, which has gained 19% so far in 2022 and is up over 64% over the past year. The Consumer XLP Staples SPDR ETF also is drawing flows, and is down 1.8% so far this year, but up over 16% within the past 12-month period. What are folks avoiding? Rosenbluth said he is seeing a rotation away from higher-risk fixed-income ETFs. Those include longer-duration iShares 20-plus year Treasury Bond ETF TLT, the iShares iBox Dollar Investment Grade Corporate Bond ETF LQD, iShares iBox Dollar High Yield Corporate Bond ETF HYG, and iShares JP Morgan USD Emerging Markets Bond ETF EMB. He said he has also seen a shift away from growth funds, like the QQQs, referring to the popular Invesco Fund and the iShares Russell 1000 Growth ETF IWF. He said long-term investors willing to ride this wave of volatility also have continued to turn to low-cost, diversified options such as Vanguard Total Stock Market ETF VTI and SPDR Gold Shares GLD. VTI, referring to the Vanguard ticker symbol, is down 5.2% on the year but up 1.7% over the past 12 months, while the Gold ETF is down 1.9% in 2022 thus far and off 2.8% over the past year period. VTI carries an expense ratio of 0.03%, which translates to an annual cost of 30 cents for every $1,000 invested, while GLD carries a 0.4% expense ratio. By the ETF dip? Dave Nadig, Director of Research and CIO at ETF Trends, ETF Database, told ETF Wrap that ETFs may be keeping on a floor on this market based on the trading action he has seen. ETF investors are the ones buying the dips, he said. He said that the volume in any given ETFs has tended to rise on the upticks, which is one sign that ETF investors are serving as buyers. Popular ETF reads as stocks tumbled. The world's largest gold ETF saw record buying demand. ARK ETF short surge on January drawdown. Valkyrie applies to list Bitcoin miners ETF on Nasdaq. SEC delays decision on Bitcoin-related ETFs from ARK. 21 shares took JP Morgan to start converting $9 billion in mutual funds to ETFs in April.